Of investing but are not sure where to start? Don't worry, we've got you covered. Today, we're unlocking the secrets to successful investing with insights straight from the master himself, Robert Kiyosaki. We will dive into 4 tips from Kiyosaki to help investors get started.
So the reason the rich don't pay taxes is because there's 3 types of income. They'll never teach you this in school. The fake teachers will never. Number 1 there's 3 types of income. Okay, number 1 type of income is earned income. That's earned income. It's when you work for money. It's earned. So that earned income shows up here. So these are the guys that pay tax. So when all the guys are screaming tax the rich, well, you can't tax them because they don't have jobs.
That's absolutely
It's kind of funny, isn't it? We're going to tax the rich. Oh yeah, good luck, you know. And the second type of income is portfolio income. And portfolio income is from flipping houses, or you buy a stock for like $10, you sell it for $20. That's portfolio income. Okay? I don't do that. Trump doesn't do that. So most guys who are flipping houses and all that, buying stocks and flipping you're getting this type of income. So this income is about 20% today. Some of that here. But the income that the rich work for is called passive income. Passive income is also known as cash flow. That's the name of our game, cash flow. And that income is income that's flowing from here to here. It bypasses taxes.
What some people may not know is that there are different types of incomes you can earn. As Robert explains, the 3 types are earned income, portfolio income, and passive income. Earned income is the money you make from working a job or running a business. It's your salary, hourly wages, or profits from your own company. Basically, it's the income you earn by trading your time for money. Portfolio income comes from investments like stocks, bonds, and mutual funds. When you buy shares in a company and the value goes up, that increase is your portfolio income. It's money your money makes for you by growing over time. Finally, there is passive income. This is the money you earn with little to no ongoing effort. Think rental income from properties, royalties from books or music, or earnings from a business you don't actively manage. It's the ultimate goal for financial freedom. By understanding all 3 of these incomes, it can help you increase your cash flow and allow you to grow your investments.
And what's happening for most people today is, they follow that age-old mantra, go to school. What do you learn about money in school? Nothing. Get a job. Well, jobs are disappearing. Not only that, is that with artificial intelligence and G5 coming, more jobs are going to get wiped out. Plus, with driverless cars, more jobs are getting wiped out. So why would you go to school to get a job? And then work hard for money, but pay taxes. Taxes are going to keep going up, sports fans. They have to. Somebody's going to pay off this massive mountain of debt stacking up all over the world. And the only way they pay off debt is via taxes. And then they tell you to get out of debt. Oh, God. Debt is money. Please understand me. In 1971, when Nixon took the dollar off the gold standard, money became debt. So the rich know how to use debt to get rich. And that's what I do. My friend Donald Trump, I know some of you hate the guy. More power to you, But we use debt as money. And other guys will tell you get out of debt. Well, you choose. The rich use debt to get rich, and the poor and middle class get wiped out because they're in debt. That's because of the lack of financial education. And I tell you to invest for the long term in a well-diversified portfolio of stocks, bonds, mutual funds, and ETFs. The key word in there is invest for the long term. Why would you invest for the long term when they're printing trillions of dollars and zero interest rate policy They're paying you nothing for your money.
Why is financial education so important? Well, why is financial education so important? Well, think of it like this. You wouldn't try to drive a car without learning how, right? The same goes for managing your money. Financial education helps you understand how to make your money work for you, rather than the other way around. With the right knowledge, you can make informed decisions, avoid common financial pitfalls, and create a secure future for yourself and your family. It's all about gaining control and confidence in your financial life. Remember, getting financially educated isn't something you do once and forget about. It's an ongoing process. The more you learn, the more confident you'll become in making smart financial decisions.
The first way you understand risk is you look in the mirror. It's who's looking back at you. You're the risk, not the investment. For example, I invest in a lot of real estate and say, oh, real estate is so risky, so I think I'll buy ETFs. So you play it safe, but you'll learn more by investing in real estate, right? Because you'll make more mistakes.
Yeah.
So that's the difference there. So it's not real estate that's risky, it's you're risky.
Yes, all investments carry some risk, but not all risks are created equal. There are ways to manage and even minimize these risks. Imagine you have all your money in one stock and it suddenly tanks. Scary, right? But if you spread your money across different types of investments, like stocks, bonds, real estate, and mutual funds, you reduce the impact of any single investment's poor performance. Another important thing to understand is that investing is like planting a tree. You don't expect it to grow overnight. Historically, the market has shown to recover from downturns and grow over the long term. So, if you're in it for the long haul, you're likely to see positive returns.
So the reason I say only lazy people use their own money is because it takes much more intelligence to raise capital. And so I've never been able, ever since my rich dad, as a little boy, my rich dad forbade me from ever saying, I can't afford it. He says, figure out how you can afford it. How can you do something? Figure out how you can do something. So over my lifetime, most of the projects I've started, I've never had any money. I like not having money because it forces me to think. I get creative. I have to educate myself. I have to talk to rich guys. Hey, how'd you do this? How'd you do that? How'd you do that? And what has happened to me, I just turned 72, I've never needed money.
Investment opportunities can pop up at any time. Whether it's a promising stock, a real estate deal, or a new business venture. Having access to capital means you can seize these opportunities when they arise. Raising capital is also essential for scaling up your investments. If you've started small and seen success, additional funds can help you expand your investment portfolio and increase your potential returns. Some ways you can raise capital is by getting loans, starting a partnership with another person or company, investing some of your personal savings, or even reinvesting your returns. Before making any investment decisions, it's important to do your own research and consider seeking advice from a trained financial professional. We hope you found this video informative and inspiring as you embark on your investing journey. Remember, with the right knowledge and mindset, investing can be a powerful tool for building wealth and securing your financial future. What was your favorite tip from today's video? Make sure to comment below and like and subscribe to the channel to keep up with our latest videos.